Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Conan, along with Brianna Valesky. I have Greg Harmon on the line, a frequent guest on our show. He's CIO and partner at Presidium Capital and founder of Dragonfly Capital. Greg, how you doing this morning?
I'm doing great, Joel. Thanks for having me.
Yeah, so let's just start with all this ECB. I mean, I know you're a technician and you file your charts and your setups and whatnot, playing the options market. Do you try and play events like this at all? Perhaps some strategies to exit, during the messiness, or do you just kind of maintain your positions and wait to see what happens afterwards and then act in the market?
Well, I look at events like this, major macro events, and try and gather a consensus for what people are talking about and what might be expected from what Draghi and others have said about it, and use that as really a backdrop to develop my strategy around. So for me, coming into this meeting, with all the talk about that the QE was finally going to get announced in the ECB, that to me seems to be a positive backdrop for stocks. You might think it's just a positive backdrop for stocks in Europe, but it's a lot of money. It's a ton of money, and some of that money is going to find its way to the U.S. So it's kind of like a tailwind to the U.S. market, and then just another thing to keep in your closet of ideas as to why things might not be so bad for the stock market.
Okay, all right. So we've had some excellent volatility, following over a 20-point range so far in the S&P futures. Currently trading up almost 1050 at 203.37 even. So you've been doing a little bit of writing on interest rates here, and boy, what a debate! We had a great debate. I don't know if you caught it at the end of the year with Ron Insana and Peter Schiff. Very diverse opinions there. What's your outlook for interest rates in 2015?
Well, I think that if anybody looks at a very long-term chart of U.S. Treasuries, you'll see that the price of Treasuries have been going up in a channel for over 20 years. I don't see any reason for that to change, although the channel's pretty wide. So could we get a pullback here? And that's really what I wrote about this morning. My longer-term look on Treasuries is that the trend is up until it proves itself otherwise. But Treasuries have a long way to go to the downside before they prove that the trend is no longer intact. I think 2015 we may see a pullback. If we see a pullback, it doesn't mean that the uptrend's over, but we're very extended from the moving averages on both the weekly and the monthly perspective on Treasuries, and a pullback would be welcome, I think.
Okay, and how do you position yourself ahead of that?
Well, I tend to follow single stocks instead of things like ETFs like the TLT, but one might position themselves in the TLT by either shorting TLT and buying longer-term calls as a hedge against that, or just buying put spreads against it.
Okay, all right. And what about, let's move on to individual equities here. Do you have anything that you're looking at here? I mean, the market has come up nicely off those lows from last week. Is there anything that perhaps didn't get the giddy up yet, and you're looking at potentially from the long side?
Yeah, there's actually three stocks that I've added this week to portfolios. One is Budweiser.
Oh,
Anheuser-Busch.
okay. That's tap now, right?
I'm sorry?
What's the symbol on that one?
BUD.
BUD. Okay.
BUD. Anheuser-Busch InBev.
Okay. I was looking at. Wow,
we added some call calendars in that. Looking for it to move above 120 sometime between February and March. And one I wrote about yesterday that I added to a couple portfolios, international paper. So nothing exciting here, nothing really racy. We're not talking about Tesla, we're not talking about Apple, we're not talking about FireEye. And the third one I added this week was Northrop Grumman.
Okay, and that's GRU, correct?
It's NOC.
NOC. Boy, I am off on my symbols today. All right, this thing is looking to break out here potentially. Right up here at all-time highs. When you do, you said you're just adding to them. Do you have specific targets on these things, or do you just kind of like use a trailing stop and just kind of let the market take you out on the downside?
Well, there's a few ways that I play these. When I do my analysis on these, I do look and see using various technical analysis techniques where I think the upside potential might be. So that's, like you said, more for determining the reward to risk relationship. And if the reward to risk relationship is good enough, then I'll start to look at the stock when it hits those upside targets. But that doesn't mean to take them off. It just means tighten stops or put in protection at that point.
Okay, any potential shorts out there for you?
I'm not looking at shorts at this point, other than the potential, like I said, in the TLT. For me, as I'm a top-down technician, so that I'm looking at the trends in the broad market first, and then looking for stocks that are moving with the trends. And there's a lot of people that might say that the trend in the equity market is sideways or starting to turn, but on a longer-term basis, the trend is still up, so I'm still focusing on the upside.
Okay, all right. Not trying to beat the trend here. Options. You've been. Are you doing things outright when you say you're adding positions? Are you doing that through the actual, issues, or do you do mostly with options?
I do both, actually. What will be a key determining factor for me often is whether or not the stock that I'm looking at pays a sizable dividend or not. Something like Budweiser that I'm looking at for a short-term perspective, I'll play with the options. But something that's got, say, a 3 or 4% dividend on it, maybe I will take a stock position in it and put a collar on it using options to protect the downside.
Okay, all right.
So it goes both ways.
Okay, you're nimble. All right. Well, final words of advice for investors here. Nice kind of a double rally off the ECB news. We got the news yesterday, then they delivered it today. Are you kind of in the mood just to go with the flow here? Is it one of those scenarios where it's the news is out and maybe it's time to sell?
Well, I think if I had one thing that I wanted to say to, especially like the retail crowd.
Yep.
The last few weeks, even a month since just before the Christmas season, we've really not done much in the marketplace. If you step back from the day-to-day and look at the monthly and weekly charts, we've really pretty much just gone sideways. With that in mind, understand that there's going to be some bouncing around within that sideways channel, and until you get out of that sideways channel, really, if you're not a professional, not in here looking to make a living off of those moves within the channel, you're probably best off just turning everything off and walking away at this point.
Okay.
Don't let the minutia driven moves shake you in and out of positions.
That's an interesting point that you make because Harlan Pine was on. He was our 8:35 guest, and he echoed the same thing. If you look back here, and I have a weekly chart up here, after you came off those Ebola lows here, and that was in mid-October, we have been in a trading range here, and it seems like with the volatility that we've broken out of it. But really, I'm gonna for my my longer-term outlook for the market this year. I mean, unless we can crack the support, at that 1960, 1970 level that we hit touch last week, we're still good to go to the upside here, and we'll see the SPOOs are 50 points away from that all-time high at 88.75. But you're right, there's a lot of noise in between there, and don't get caught up in the tick, but look long term, and that's what we're doing here with Greg Harmon. He is CIO and partner at Presidium Capital, founder of Dragonfly Capital. Greg, thanks. You're always a great guest. Thanks for coming on. We'll talk to you again soon.
Thanks for having me, Joel. I'd love to come back.